Hey guys, Alchemist here. In today's video, we're going to be looking at this trade recap here, which was a short in the Frankfurt session of Friday the 3rd of February, which ran for 7% in a total of 7 minutes. So again, we didn't have the best week in terms of price action this week that's just passed, but when we're reviewing it with the community on the weekend, which we do every weekend, we do a backtesting session of all valid setups for the week that's passed. We actually did see that there was 32R on offer just following the flowcharts that I've created if we were to execute on every trade. That was a 10R day on Monday. Tuesday, no trades available in Asia that fit our plan. And then one which was at the New York Open London close for 7R. Wednesday, no trades available at all. Thursday, no trades in Asia, and then 2 losses in London, followed by an 11R win. And then on Friday, again, no Asian session trades, and then 1 loss in London and this 7R win in Frankfurt Open. So that equated to a total of 32R for the week. And now let's break down how we could have got involved into this short here. So as always, we're going to be starting off with a blank weekly chart. Now this supply here, it is still valid. We can see it has been swept and we have taken a lot of liquidity, which has caused price to push down, but we haven't yet closed above it with a body. So this supply hasn't yet failed on the weekly. So this here was just a liquidity sweep for now because we haven't actually closed above with a body. Just refine that a little bit more. But however, now that we have set this higher high, even though it is just a wick, we can now identify this as our new demand zone. We're no longer needing to reference this one in the past. We can see that it's sort of building a demand chain. So we can still see that this demand here is what has pushed price up to allow us to close, or not close, but push above this weekly supply. So this is a demand. And then we have now created a new demand zone in this candle, which you can see has been mitigated throughout these weeks, but we don't really need to be refining it on the weekly. It's not really a time frame we use too much to frame up our ideas. It's just more so for us to understand where we're situated in the higher time frame. So this here is now building a demand chain. Off of that, we have swept above and have had a higher high. It hasn't been with a body close, but there are certain rules for that, which will all be explained throughout the course. So this here is the demand. We can get rid of this one. And this is still the supply until we have a body close above. So that's all that we need to do on the weekly time frame. And we'll jump down to the daily. Now here, we only had a pullback of greater than 110 pips. However, we didn't actually have a body close above. So these were both just wick breaks. So this is still going to be our daily high. So our daily boss was this one here. When we did have a body close, this is our daily boss. And the lowest point below there is going to be our daily low. So again, that's all that we need to be doing on the daily. Again, this is not a new boss because we haven't had a body close above. It was just wick break, so it's a sweep, and we can see how aggressively we have pushed down after sweeping both the daily high and the weekly high. And we can go down to the 4 hour. On our 4 hour, where the daily just swept, on the 4 hour, it was actually a boss when we had this inside bar closing above. So I'm just going to make this a bit neater. I'm going to flip this onto the other side so it's not in our way. Align these a little bit better. And then we'll identify this here as our 4 hour boss when the inside bar closed above. Then we have had a bearish pullback greater than 90 pips. So we do have our 4 hour high. And our 4 hour low is simply just going to be the lowest point below our 4 hour break of structure line. Just to make these perfect. 4 hour low. And therefore our range for our 4 hour is from this low here to this high. Make this our premium discount. Not too many zones on this 4 hour range. Well, we will have a look at what we do have on offer. So we have, this is the extreme demand. We can see we can actually bring this down to the unmitigated portion. Then we have these buy to sell wicks. Then we have this one here, which is the first demand, which is within the discount of our 4 hour range, which is where price is actually currently when we were looking to take this trade. We have the extreme supply. All right, we can just take the wick. Again, majority of it has been mitigated. It's a very, very tiny portion that hadn't. So let's just be systematic with this and leave just mark out the unmitigated portion of the wick. If I can grab the rectangle, a little bit more. That should do. Okay, perfect. So I have this as the extreme unmitigated. Push it down to here. Then we can take the new wick of this candle, which did mitigate the extreme, as a new supply. All right, I'll just make them different lengths so that you can distinguish that they're two separate zones. Then these ones here, they haven't actually interacted with any sort of demand on this side. However, this would actually be the whole supply. And then we can see that that has been mitigated. So again, we'll take this portion, then we'll take these, just the wick here as well. Beautiful. Tapping into this, we can see we are starting to create a supply, but it's not going to be a supply until we close below this demand. Okay, so that's really all that we need to be marking up in terms of our 4 hour here. However, what I hadn't done is mark the corresponding suppliers on this side. So this is the supplier that created those buy to sell wick demands. And then this one here was created by this. Pushed down, pushed up and broke above. So it's the flip of this supply. And that's all that we need to do on the 4 hour. We'll go down to the 15 minute. And our 15-minute boss was here after we had 2 times body closing below. Again, if you haven't watched my 15-minute mapping of market structure video, I will post a link to it in the top right-hand side corner. This was our 15-minute boss. Our 15-minute high was up here. And our 15-minute low was after this low here gave us a bullish pullback greater than 22 pips, which at this point I had. Just show you again, I think it was 23 point something. Yeah, so 23.2 greater than 22. We've now confirmed our 15-minute low. We can refine this down. So this was the 4 hour zone. On the 15, we can refine it to this wick. Beautiful. We'll drop our premium and discount for the 15-minute range as well. And we'll get some zones marked out. So of course we have our 15-minute extreme supply all the way up here. We have our 15-minute extreme demand all the way down here. Will be our demand. Then we have these very minor buy to sell wicks which interacted here, creating this one, this candle here, which does sweep on a lower time frame. This is a supply. Moving further up, we have this inside bar. Again, it has sort of been mitigated. We can take the unmitigated portion. We can just be aware of the whole sort of supply range there. We can take this to the top of the wick. So this is going to be that first supply within premium. However, we don't necessarily have to be going back to premium every time. The retracement should be going back up to there to get into a better, more efficiently priced zone for price to continue its leg down. However, it doesn't necessarily have to make it all the way back up there. So there are times we can still take sells in discount. Just depends on where you're situated in terms of 4 hour, 15-minute structure and order flow, again, which is all laid out for you in the flow charts. And then up here, we do have a supply chain forming. So this gets mitigated here. This gets mitigated here. The whole candle takes up quite a large range. And so you can see we sort of build this supply chain from here to here to here. And then this was the last supply here. In terms of order flow, we are still bearish. For price to be turning bullish, what we needed to do is after we took the low here and we had an inside bar in between, we would have needed to close above the inside bar with a body close. So at this point here, it was just a wick. We hadn't closed above with a body. Therefore, our order flow was still going to be bearish. We're only going to turn bullish if we were to have a bullish close above this CH line, which we didn't actually get. So once price did come into the supply, again, it is a supply zone in discount, which is not ideal. We do prefer to take sells from supply zones in premium, but again, they don't have to be. This is 100% valid as per the flowcharts. We can jump down to the 1 minute at this point and try to look for entries here. The other thing I wanted to note, so we have these minor buy to sell wicks, which are demand chain from the bottom extreme. And why they're important is they have been mitigated by this little POI, which has swept liquidity below the inside bar, which will help us frame up our target. So here this zone has swept. Beautiful. So now we are in this 15-minute zone. We haven't yet turned bullish in terms of order flow. I am going to have a small coffee break. And we are going to jump down onto the 1 minute. So looking at the 1 minute, coming into here, we did have a small chock. Okay, we hadn't yet given any of the liquidation models that we need to look for before we can take an entry. So we are still just going to wait for one of those to occur. Okay, and then what we have done here is we have taken a large amount of liquidity. Okay, not going to say too much more besides that. So we've taken sufficient liquidity. And for us to have a bearish chock here, what we would need to see is once we had this candle here trading lower, we'd want to see a body close on the 1 minute below this low. That would be our 1 minute chock down to have our 1 minute order flow align with our 15-minute order flow, which aligns with our 15-minute structure to take continuation shorts. So at this point here, we'll play price along. It does take a little while. Beautiful. We have now closed below. So 1M is now bearish. Looking at this, right, when we look at a sweep, we want to see an aggressive push away. We can see here price just sort of hangs around, right? It doesn't really push down with any real sort of conviction. However, there is still a trading opportunity off of this. So what we would have done is we would have looked at this as the demand zone, right, which created this higher high. And then tapping into that, we do have this as a supply, which had swept liquidity. All right, so this is a flip that has swept liquidity above here, because we do have this candle trading lower. And so we can look to take a short off of this candle. Okay. Order flow is aligned. We have had sufficient liquidity taken. We've had our 1 minute time frame realign in the direction of our trade. We can definitely be placing a limit off of this. And what we can do with this one, right? So we want to be covering the high. The high of this is 708. So this is covering it by 0.6. Okay. We can just be using a 2 pip stop loss at this point, because if we did also have an entry on the extreme here, this stop loss would already have tagged us into our next trade. Therefore, we could potentially be losing 2R, which goes against my trading plan. So I'd only be using this one here. And then if this doesn't work, we can look to re-enter after that. So what we would be doing is this demand zone has been mitigated when we have tapped into it here. So I can just actually get rid of it altogether. Or what I'll do is I'll actually just refine it down on the 1 minute to this demand. Right, this has also swept quite a bit of liquidity. Could give us some sort of a pullback. But we're not targeting 1 minute zones, we're targeting 15-minute zones. So the 15-minute POI, which had swept liquidity, was this one here. And so we can run it to here. And then if we look at it after creating the 15-minute zone, right, so it was stopped its creation here, price had gone up and come back down and tapped into it or mitigated that 15-minute zone. So this inside bar and the bottom wick here had actually already mitigated that 15-minute extreme. So not extreme, but 15-minute demand zone. So we can actually just be targeting the tip of that there, okay? Did just add 1 tick, right? But what I'm using that for is, instead of where I've in the past used 25%, in this case here, because that zone has already been mitigated, I'm looking at the next unmitigated portion, which is this portion here. That's why I'm not setting it to 25%. That's why I'm setting it to the bottom of this candlestick. So let's see if this trade goes to plan. All right, so we do get a reaction off of that 1 minute demand, which I'd refined from the 15-minute, which had been mitigated up to here. And we can see we'd be in and out of this one in about 3 minutes, right? Stop loss. Completely fine, a very valid loss. Just minimize it a little bit just so it's not too much in our way. And this here is -1R, okay? This was in the statistics as well that I showed you at the beginning of the video. Now that this has occurred, let's look if we can get a re-entry. Beautiful. So now what we've done is through here, we have generated more liquidity. And this here has now swept that newly generated liquidity. And so we'll play price a little bit along. Now, if we're looking for another 1 minute bearish chop, because at this point here, price is bullish, what we'd want to see, I'll minimize this a little bit so you can see it here, is we have this candle, which we have this black candle trading lower than the mother candle. So if we were to have a body close below here, we would have a 1 minute bearish change of character down. Minimize this so it's not in our way. Beautiful. So that first entry is a loss. We've now swept additional liquidity. We're now waiting for order flow to switch bearish on the 1 minute, which we have just had. And looking at this here, we have this inside bar. Okay, these buy to sell wicks aren't very nice. I don't really like buy to sell wicks on the 1 minute for entries, especially after taking a loss. So I do have a very strict system of risk management and trade management, which dictates when I'd be taking a flip if it hasn't swept liquidity, when I can take a flip if it hasn't swept liquidity or has inducement, or when I only play the extreme. At this point here, I'm not going to be using buy to sell wicks. What I can be doing is using this 1 minute POI, looking at 25% of that, covering the high of it by at least 0.3. Right. In this case here, we can see that it's quite a small zone. So I'm happy to just play 2 pips, which is actually helping us cover the whole extreme. So I don't have to have an entry on the flip and the extreme. And then we'll have the exact same target, which was not that one. That's the 1 minute POI, which is this one here for exactly 7R. So now let's have a look at how this one plays out. Right. So we've already now had 1 loss. We've swept more liquidity. We've tapped into this. We've pushed up aggressively. We've taken liquidity and we've stacked orders, right? Because we now have sideways moving price action, whereas before it was just an impulsive push up with just one. There was an imbalance because there was all buy orders and no sell orders. Then now we've had sell orders come back into the market, which causes price to compress. And now we are looking to take that short. So after this, we'd literally be tagged into the next minute. So you'd have to be really quick with your execution on this one. And then it was a whole really quick trade, to be honest. Let's see how long it took us. So it's 2 minutes, 3 minutes, 4 minutes, 5, 6, and 7. 7 or 8. Let's check. 7 minutes. Beautiful. So 7R in 7 minutes. You got to be happy with that. Again, we only target 5R per week, which allows us to pass any prop firm challenge, which I am taking one very, very shortly as well. And I'll be announcing that on YouTube and on Instagram. So make sure you follow me there. I'm actually going to do a vlog as well each day on how I'm feeling throughout the challenge and which trades I'm taking and why. So if you aren't currently following me on Instagram, please go ahead. The link is in the banner of my YouTube banner. And you can also click the link in the description below. So this trade here was 7R in 7 minutes. It was between Frankfurt and London Open. So London Open in Sydney is currently at 7 p.m. and this started at 6:27. It is okay to take those trades in Frankfurt. Just depends on how much testing you've done on your strategy and everything else. Currently, I'm only trading Asia, so full discretion. Discretion. I haven't actually taken this trade. This was just something that we did as a markup. All live trades that I'm taking will be shown in the future as well. And I will also be having a link to my FX book just for full transparency. So if you do have any questions, please let me know. There is 1 week left on the free Discord as well. So make sure you do jump in below and jump on that link so that you can make the most of it before it goes away. We'll be having another Q&A session in this week coming up as well. And I will be ramping up all Discord interactions. So make sure that you're a part of it so that you don't miss out before it goes away and moves on to only being a paid service. If you do have any questions, please let me know. If you'd like to see other content from this channel, please do let me know as well. If you've made it this far and you haven't yet subscribed, I do ask that you do. It would really help me out a lot and I appreciate it. And let me know what you'd like to see in the future. So I hope you guys have an incredible week coming ahead and I look forward to speaking to you next weekend. Take care.